Hello students, welcome to MJC Learning. In this video, we are going to discuss the subject Secretarial Practice for Standard 12, and also today we'll learn a new topic in the chapter Financial Market. Instruments of Capital Market. In the previous lecture, we have seen capital market deals in the medium and long-term financial securities, and it is also known as the securities market. Thus, the capital market plays a major role in the growth of the economy, and it allows transfer of funds from people who have surplus money to those who requires it. And this process of transfer of funds is done through the instruments. Yes, students, instruments are traded in the capital market. Instrument, it means financial securities. And these instruments which are traded in the capital market are equity shares, preference shares, debentures, bonds, government securities, and public deposits. So students, let us study them in depth. The very first instrument in the capital market is equity shares. Equity shares are the vital source for raising long-term capital. Equity shares also represent the ownership of a company, and the capital which is raised by the issue of such shares is known as owners' fund. They are referred to as residual owners. This is because equity shareholders are paid on the basis of the earning of the company, and they do not get fixed dividend. Second instrument is preference shares. Preference shares are also a long-term source of finance of a company. Preference shares are those shares which carry preferential rights. Yes, students, preferential rights, that is, over the equity shares in the event of liquidation of a company and fixed rate of return, that is, dividend. Third instrument in capital market is debentures. Debentures are a medium-term borrowed funds of the company. Debenture, it is a certificate of loan taken by a company. They have fixed maturity period as well as they carry fixed rate of interest. Fourth instrument in the capital market is bonds. Bonds are the basic debt securities that are traded in the capital market. Bonds are the long-term borrowed funds. Companies issue bonds to raise capital as investors subscribe to them. Issuing bonds helps the company to raise capital for the growth and expansion of the business at the cheaper rate than the banks and leading institutions. The bond issuer pays interest and return the principal at the end of the duration. Second last instrument is government securities. It is an instrument issued for a long term. Government securities is a tradable instrument issued by the central government or the state government. A government securities is a bond or other type of debt obligation that is issued by a government with a promise of repayment upon the securities at maturity date. Last instrument is public deposits. The deposits that are raised by the organization directly from the public are known as public deposits. Public deposits take care of both, that is, medium and long-term financial instruments. Cost of public deposits is lower than the cost of borrowing from banks or any other financial institutions. So students, these were the instruments of capital market.
Thank you.